All right, guys, welcome to episode 101. And we're going to do something a little bit different today. We're going to have a little more of a structured show with chapters in YouTube, and we're going to put the timestamps in the podcast description as well. But if you're new here, I'm Chris Dunn. I've been trading for 20 years, been obsessed with crypto for 10 years. We've got Nikki, who's a certified financial planner. We've got Travis, stock geek, who is a former hedge fund guy, and we've brought him to the dark side of retail investing. How you guys doing, man?
Fantastic.
Good.
So much to talk about this week. As usual, the past couple of months have just been nuts. We're going to talk about the Fed, which is nuking the economy with higher interest rates. We're going to talk about the battle between the crypto economy and the SEC. This week, we've had some pretty big, I guess, wins for the crypto space. We haven't really had many wins recently, so this week is looking pretty good and interesting. We're going to take a look at TA. We're going to look at the charts. We're going to talk about what'd you call it, Nikki? The trend line of death?
Trend line of doom.
Trend line of doom.
In the S&P 500.
Okay. We're testing some major levels, and yeah, rates are taking off. What else is going on? We're going to talk about housing. We're going to talk about the auto market, which there's some weird stuff happening there. And we've got a bunch of questions for you guys, from you guys. So
we're going to talk about the fight between Elizabeth Warren and Jay Powell.
Oh yeah, we're gonna have some fun. Before we do that, today's show is sponsored by us, the Skill Incubators Wealth Building Community. Go to wetalkmoney.com/community. You can use the promo code BuildWealth to get your first month or quarter half off. Go check that out if you want to trade and invest alongside of us. Now, with that said, guys, I think we should just jump into the Fed stuff. There's just so much both funny and scary things happening right now. Why don't we just recap what the Fed said this week?
Well, they basically said they're going to keep raising rates, right, Trav? That was like the biggest takeaway from all of it.
Yeah, I mean, and the market reacted quickly. The market went from pricing a 25 basis point rate hike at the next March Fed meeting to pricing in very quickly a 50 basis point hike. Now, that doesn't sound like that big of a difference, but it's a pretty big deal because the Fed had already slowed down to 25 basis points at the last meeting. Now they're going to put the foot on the gas again. So that is definitely starting to spook markets a little bit. And it's calling into question the Fed's credibility a little bit too, I think.
It was interesting because I actually watched the whole testimony. It was like 2 hours or whatever that I ended up sitting through on 1.5 times speed, because you can only handle so much at one time when you're listening to that stuff. But I did like gain some takeaways from it. Interestingly enough, crypto got brought up often. Decentralization and crypto got brought up often. But I actually kind of felt bad for Jay Powell because those Congress people were really going after him.
Why don't we take a little bit of a detour real quick, and we'll just play this little video clip. Very interesting dialogue between Jay Powell and Senator Warren.
If you continue raising interest rates as you plan, unemployment will be 4.6% by the end of the year.
It's not an intended consequence.
But it is, and it's in your report, and that would be about 2 million people. If you could speak directly to the 2 million who you're planning to get fired over the next year, what would you say to them?
Inflation is extremely high, and it's hurting the working people of this country badly, all of them, not just 2 million of them. And we are taking the only measures we have to bring inflation down.
And putting 2 million people out of work is just part of the cost, and they just have to bear it.
Well, will working people be better off if we just walk away from our jobs and inflation remains 5-6%? It's not as black and white as it. Very
just
very
looking at the numbers. It actually is pretty black.
Alan Blinder's written a book on this, and
there have been 12 times that we've seen a 1 point increase in the unemployment rate in a year. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right.
Right now, the unemployment rate is 3.4%, which is the lowest in 54 years. And we actually don't think that we need to see a sharp or enormous increase in unemployment to get inflation under control. Even 4.5% unemployment is well better than most of the time for the last 75 years.
Oh man, good old Senator Warren, a friend and a comforting person for the crypto community and entrepreneurs and capitalists alike.
It was hard to watch because, I kind of said it this way. It felt like she was trying to take blood from a stone. And I say that because of this. Like, the Fed only has so much they can do, right? Like, their job is to raise and lower interest rates. And the reason that inflation is so high is really, as we kind of have determined, was because of all of the spending that the government did, the fiscal spending. The Congress people like to spend money, and they spent a lot of money out of necessity. That led us to inflation. And now she's mad because the Fed is doing what they have to do with the only tools that they have to try to beat this inflation. And she's mad because there's going to be unemployment. But it's like, this is the consequence of the actions that were taken. And to me, I'm listening to that and I'm like, how does she not see that? And not to get political on, either side. It's like, it's just the facts.
Yeah, my question for Senator Warren is, what are you in Congress doing to try to address the inflation issue? Because as you mentioned, it's their fiscal spending that really kicked off one of the big waves of inflation that we've seen. And so we like to criticize the Fed a lot for the mistakes that they've made. But in this instance, I really do think Jerome's just kind of doing what he can with the tools that he has, like you said, and it's really the fiscal spending side that would probably need to be addressed. They were just passing the Inflation Reduction Act and all these other big spending bills a few months ago, and now they're complaining about the Fed having to raise rates to try to, choke off the inflation problem. And we know that if inflation becomes a runaway issue, that if we allow it to get too high, that it feeds on itself, and high inflation sort of begets high inflation in a vicious cycle. So the Fed has to do something. Not saying that they've been perfect. Certainly we can continue to criticize some of their moves.
For sure.
But yeah, Senator Warren should not be casting stones from her glass house.
That's kind of what I gathered as well from it.
Let's talk a little bit about what's happening with rates and what this could potentially look like. So Bloomberg put out this article, deepest bond yield inversion since Volcker suggests a hard landing. So basically the difference between the 2-year yield and the 10-year yield is off by a full point. If you look at the inversion here, this is gnarly. What do you guys make of this?
It's the deepest inversion we've seen in 40 years. So yeah, maybe ever. I'm not sure if we have the data going back like 100 years or something like that, but it's the deepest inversion we've seen in a very long time, certainly for the majority of most of our lives.
For sure.
And we always say, when we get this deep of a yield curve inversion, when you look at prior yield curve inversions, they've often led significant recessions by 12 to 18 months. And so that's why the market is like, wow, the bond market's basically screaming at us that it expects a significant recession, maybe a hard landing. Now, there are some people out there that believe perhaps this could be a false signal. It's not like every economic signal is always 100% correct. And we should talk about that at some point. But I think the bond market's probably right that we have a real issue here with rates rising in the short run. And when you look out longer term, the Fed's probably going to have to over tighten and create a situation where the economy does weaken and we could be back in some type of soft economic environment. So I think the bond market's probably right. And stocks are still kind of ignoring it. Stocks have sold off a little bit, but this was a big deal. We had a pretty big move up in the probabilities of the Fed's terminal rate and where the Fed is going to be hiking rates this year. And stocks were down a little bit in the past week, but they didn't move down as much as I would have expected given where we've seen short-term rates go.
Well, Trav, if this trend line of doom breaks down in the S&P, that's where I think people are going to hit the oh shit handle. They're going to be, okay, all right, we're not holding up like we had originally thought. That could get interesting.
Totally. I 100% agree.
Yeah, taking a look at the charts here, we can see that the 2-year is currently trading above 5%, and the 10-year is below 4%. And the short end of the curve, if we take a look here, excuse me, at the 6-month, you can see the short-term bonds are just really starting to go parabolic. Yesterday alone, the 6-month went from like 5.1. We're at 5.3 today. So this is getting pretty interesting.
This is going to put a lot of pressure on places like the real estate market, but also any companies that have used debt financing with floating rates, private equity firms, anyone that's got leverage on the balance sheet. This is going to create some significant headwinds. And so for sure, even though it looks like unemployment's still low and the economic signals that we gotten at the start of the year are still showing relative strength in the economy here in North America, this inevitably, if these rates keep on this path, will cause significant weakening in the economy. So
Trav, why don't you talk about this tweet that you sent yesterday, talking about how the probability basically doubled to now the market's pricing in 50 basis points, right?
Yeah, exactly. Yeah. So we went from like a 30% or so probability of the Fed hiking a more aggressive 50 basis points at the next March meeting, which is on March 22nd. The market was pricing in 30% prior to Fed Chairman Powell's speech in front of the Senate Banking Committee. And then as soon as he got into his comments and it became clear that they are actually considering 50 basis points because of some of the stronger economic data we've seen recently, those probabilities jumped up to over 60%. And I think today they're over 70. So we've now moved from a situation where the market was like, we don't think the Fed's going to go 50. They're going to stay on this 25 basis point slower rate hike path. And now the market's like, oh shit, actually the Fed's going to go more aggressive again. They were aggressive, then they slowed down. They're going to go aggressive again. That's really strange. And the market now is having that as its base case expectation, which is pretty surprising. And again, I mean, stocks were down a little bit, but I would have expected, if you told me at the beginning of this week on Monday morning that the probabilities were going to shift from 30 to 70% in 2 days, I would say stocks will probably limit down at some point this week and would end the week down 6-7%. So I don't know why NVIDIA is still trading for 20 times sales and 55 times earnings, frankly, in this environment, but that's where we are.
Honey Badger don't care.
Hey, don't take our crypto term.
No, I don't. Was that a crypto term? I don't know.
Oh, yeah, absolutely.
We've been saying that.
Look, taking a look at the daily chart on the S&P 500, this is about as major of a confluence area as you can get as far as
my God, I know.
goes.
It's beautiful.
If 3,900 snaps, I mean, obviously anything could happen. It could trap. But I think to what you said earlier, Nick, about, just a complete washout if this support can't hold, I think the odds of that happening are pretty big, right? So maybe, bonds are kind of leading the charge here a little bit. And we'll see. I think the next few days are going to be really important here. Let's talk about crypto. Man, what a wild past couple of weeks we've had in crypto. Just talking about the altcoin market first, I've called this, we're in trap season, right? Bitcoin was up quite a bit. A lot of alts were also up quite a bit the first month or so of the year. And now we are in what I call trap season. There were so many charts that were showing potentials for breakouts. And I told the community, I'm like, guys, I might nibble on something here or there, but like for the most part, be very, very cautious because stocks and Bitcoin are running the show. And so I sent a watch list the other day that showed, I think like 10 to 15 charts that showed potential breakouts, and then they all just trapped. And so right now it is just a very, very dangerous time in the crypto charts. We can pull up kind of the overview. This is the 30,000 foot overview that I use looking at, the monthly first. You can see we're getting rejected from that 25K zone, which is also the 50 period moving average on the monthly. Also the weekly, we have the quote unquote death cross that's been holding price down. Also the daily chart looking pretty heavy right now. We're kind of in no man's land. I think the highest probability support zone is down here around 20K, where we've got the 200 and the 100 period moving average, also prior resistance turned support. So yeah, I don't know. Obviously, stocks have been kind of running the show as far as market direction goes. And my thesis is still the same. Whatever happens to stocks, Bitcoin's going to follow. And we've also seen Bitcoin dominance starting to catch up, which means that, alts just haven't had much legs, right? A lot of them have just been kind of lagging behind Bitcoin, which makes sense. That's what we see in bear markets or times of consolidation. And with the regulatory pressure that we have, I don't see that really easing up anytime soon. But that's kind of the 30,000 foot overview. There's so much to talk about that's been popping this week. You know, the fight between Grayscale. We can talk about that. Also, we've got Mt. Gox releasing some coins. We've got what else?
Silvergate in distress.
Silvergate. Yes. Bank. Yeah. Why don't we start with that? Trev, give us a little insight into what happened with Silvergate.
Well, Silvergate is a fascinating story because they were one of the traditional financial institutions that started catering to crypto a few years back. And so a lot of the crypto exchanges and various crypto firms started funneling money through Silvergate. So they started using them as their fiat on-ramp, so to speak. And I also think they were some of them were using them for certain types of custody of certain crypto assets. And of course, after the whole collapse of FTX, a lot of parties started looking at their counterparty risk. They started looking at, who might be on the hook for some of the legal liabilities, and Silvergate was on the wrong end of that. And so a lot of the crypto firms started pulling their deposits from Silvergate. Silvergate's essentially a traditional bank. And when a bank loses its depositor base, we call that a run on the bank. And that can often lead to significant stress and sometimes liquidation or wind down, because the bank loses enough deposits that they have to sell assets at fire sale prices, and they essentially destroy all the equity and they end up insolvent. And I think that's actually where Silvergate is headed. And I tweeted about this in January when I looked for the first time deeply at Silvergate's financials. It had not really been a stock I'd followed at all, but in January, because they had reported earnings and there was a big move down in their common equity on their balance sheet, I was like, what's happening here? So I dug in. Stock was still trading, I think, around $12 a share at the time. But, the destruction of value there was amazingly quick. And yet a lot of people still thought that maybe there'd be a short squeeze and the bank would survive and that it would go on to reclaim its former heights. But I was looking at the financials and I'm like, this thing might be a zero. Like, there's a very good chance this thing's going to zero out and be a total failure. And of course, it's now down 50 or 60% from January when I was tweeting about that. And the reasoning is, they're still in distress, and I think they're still seeing deposit outflows, and there's legal potential liabilities from their dealings with FTX. So Silvergate's in a very bad place, and I don't think that it is long for this world.
Yeah, it's unfortunate. I guess on the other side of that, though, and good call. I mean, you were posting about that back in January. We've got some good news this week. Grayscale had a little bit of a fight with the SEC in court this week. I've got like half a dozen news articles we could pull up, but you want to give us a recap on that, or any opinions on what we saw this week so far?
Yeah. Hey, another one where we can check the receipts, right? I tweeted about GBTC. I did a big thread back in November of last year. And this was actually a crypto investment that I had made on the long side that I thought, hey, this actually has some real upside. And GBTC has mostly been a disaster story for most people who invested in it over the past couple of years, because it's traded down at such a significant discount to the value of its Bitcoin holdings. A lot of people believe, because of its connection to Genesis, that maybe they didn't even hold the Bitcoin that they say they did, even though Coinbase was the custody agent for that Bitcoin. So I dug into Grayscale, the Bitcoin trust, and decided, hey, I think this is interesting, trading at almost a 50% discount to its net asset value. It's sort of a way to play Bitcoin at a discount. And so I had bought a small position, and, Grayscale is fighting with the SEC because the trust structure of Grayscale's Bitcoin trust doesn't allow it to have easy redemption mechanisms and creation mechanisms like a normal ETF would, to try to arbitrage away the discount. So with normal ETF structures, the sponsors of those vehicles would be able to get rid of this 40+% discount to net asset value. But because Grayscale isn't an ETF and the SEC won't approve a Bitcoin-based ETF, Grayscale is stuck with this big discount. So Grayscale decided to finally take the SEC to court, and they had the first oral arguments in the case against the SEC this past, what was it, Tuesday, I think. And it looked like, from the commentary from the judges and the questioning from the judges, that the judges are very critical of the SEC's arguments and seem to be leaning much more in favor of Grayscale's arguments that the SEC is basically on the wrong side of not approving Bitcoin-based ETFs. The SEC has approved the futures-based ETFs, but they won't approve a spot Bitcoin ETF, and their reasoning seems very flawed. And so this would be a big deal if Grayscale beats the SEC in court. then potentially that could lead to a pathway for the Grayscale Bitcoin Trust to either convert to a spot ETF or perhaps some other means of arbitraging away that discount that GBTC trades at to its net asset value.
Excellent explanation, man.
Very good.
That was awesome. Let's give you a little.
And it's better. Yeah. It's better for the consumer to have a Bitcoin ETF versus the futures, the Bitcoin futures ETF. It's so stupid.
Yeah.
Mm-hmm.
It's the dumbest shit ever.
Tell us how you really feel.
Sorry. It's just
no, it's great. There's also a couple of, really good Twitter threads that were kind of real time tweeting about this. And yeah, I mean, like you said, Trev, it seems like the judges were really just pressing the SEC on their thinking, and looks like the odds are kind of shifting in our direction. We kind of needed this.
Yeah, it's great to see. It's great to finally. Again, we don't know the final verdict. The final verdict won't be out for, I think they said 3 to 6 months estimated. But given what we saw during the oral arguments, it seems like the judges were very critical of the SEC. And so hopefully that will go in Grayscale's favor. And if it does, it'd be a great win. I mean, the SEC under Gary Gensler has done all sorts of things that are just baffling to us as investors. They've gone after, the small fries and let like these massive frauds just go untouched, and all, among other things.
Mm-hmm.
So we have some issues with the current SEC, and it would be great to see them get beat in court.
Trav, I have a question. I know that you bought this a while ago at the lows, but to me, I'm looking at the GBTC chart and it looks like we've got a little breakout happening here, and it doesn't look like the trade is over. So is it too late to participate in this trade?
I don't think so. I mean, the discount to net asset value is still over 30%. So while the biggest juice in the trade, may have been squeezed, I still think there's still some to squeeze out. The risk reward at $8 when it was trading at a almost 50% discount was almost too good to be true, right? I mean, if you have a 50% discount to NAV and the stock were to immediately trade up to NAV, you go from 50 cents on the dollar to 100 cents on the dollar. That's a double. You actually make 100% on your investment if it were to do that overnight. So, that reward level, and that assumes no change in Bitcoin's underlying price. So that's just closing the discount. And if you have upside with Bitcoin itself, that adds to the upside to the trade. So if you're bullish Bitcoin, then definitely you would see some potential upside still here in this trade, because you still have a discount to NAV and you have potential upside from the underlying asset. Mm-hmm. Now, there are high fees here. There are fees that are charged as a percentage of the net asset value by Grayscale as the sponsor. And they've been targeted with criticism about those. And hopefully those fees will be reduced over time. But that is something to keep in mind. And of course, the risk of having a vehicle that is tied to the performance of Bitcoin can be a risk as well.
Mm-hmm. Another piece of really just a piece of news or something that happened this week that just warms my soul. Everybody knows who Paul Krugman is, right? Trav, give us a two-liner on who Paul Krugman is.
Paul Krugman. How do I say this in a neutral way? Paul Krugman is a famous economist who writes for the New York Times, and he's also been an advisor, I think, to some past presidential administrations, and he has very strong opinions about economic policy.
And he loves Bitcoin, right? He's a huge Bitcoin fan, I think. No, he's
just like Elizabeth Warren.
Yeah, him and Elizabeth are buddies. No, but just like, a lot of the Bitcoin haters out there. I mean, he's been very, very vocal, and I mean, he has a Nobel Prize for economics, and I think he's a pretty smart guy. He's just misguided. But the thing that warms my soul is this. Paul just tweeted today. Listen carefully, everybody. I'm too busy to tweet, but not to vent. I've been using Venmo for years, but now it won't allow me to make payments. I spent a long time in chat with representatives, and they told me that they can't explain why or fix it. The software has taken control. I actually thought this was like a parody tweet at first. And I was like,
parody to me.
It does, doesn't it? I had to make sure this was legit. Maybe he got hacked. I don't know, but The next tweet, he goes, and tweeting got results. A representative called and we seem to be up again.
Does he know that technology goes down from time to time?
Right. Or if there was only a better option than Venmo for sending payments, that there was no middle fucking man to.
Here we go.
Call, right. And then I love the comments in here are just beautiful. I don't know when he tweeted this, but somebody copy and pasted his prior tweet where he goes, cryptocurrency lets you make electronic transactions, but so do banks, debit cards, PayPal, Venmo, etc. All these other methods involve trusting a third party, but unless you're buying drugs, assassinations, etc., it's not that big of a deal. You can't make this up, man. This is just, it's so amazing.
So I wonder what kind of drugs he was trying to buy.
Exactly. You know, what exactly were you doing over there, buddy?
What is Paul's drug of choice? Can we speculate?
Oh man, good question. Probably an upper, I would imagine.
Oh yeah.
Adderall, maybe.
Yeah. Man, yeah, just so much going down the line. Also, let's see, Thursday. So depending on when you're listening to this, Thursday at 2 p.m., there's going to be a hearing covering Biden's attack on crypto, right? I think this is just going to be a really fun one to look at because there's so much at stake here. And this will be a battle. You know, the Biden administration has not had any qualms about being very public that they are attacking crypto. It's not a secret, you know, and I think the battle will really start to heat up here in going into Q2 and throughout half of the year. So we'll see.
Do you remember when the congressional representatives were grilling some of the social media executives like Mark Zuckerberg and Jack Dorsey and Sundar Pichai?
How do you make money?
Yeah. Do you remember how cringe and bad those questions were? I can't even imagine how dumb the questions will be around cryptocurrency.
Oh my God. Yeah.
Even some questions yesterday with Jay Powell were bad. I was like, what? Do you not know what they do?
Right. The memes though are going to be incredible. That's what I'm excited about.
Well, yeah. No, it's cringe. It's cringe to listen to.
I mean, I feel like I'm watching like my grandmother grill, you know, one of my young nieces or nephews about how an iPhone works. Like that's how out of touch these old people are, man.
Mm-hmm.
There's a few of them that are good, but like for the most part, I just agree. Sadly.
It's unfortunate, but it's true.
Yeah.
All right. So we talked a little bit about TA. Let's talk about the stock market and what environment we're in right now. You know, talking about crypto, altcoin is in trap season, Bitcoin's in between support and resistance. How are you guys making money in crypto other than, GBTC or in stocks other than GBTC and things like that? What kind of environment are we in?
It's honestly tough for me because it's really hard to make a case for a stock's value when you're comparing it against, you know, low risk short-term bonds that are yielding 5+%. The hurdle rate has just gotten much higher. And frankly, a lot of stocks are still not cheap. So I'm sitting here and I'm like banging my head against the desk trying to figure out, what do I buy on the stock side? Obviously, you know, stocks are longer term assets. So, you know, you don't only consider what the short-term rate is versus a stock, because hopefully over the long term, you expect stocks to grow their earnings, even if they go through a tough short-term period. Mm-hmm. But nonetheless, I mean, that discount rate, that rate that you compare against has gotten much more robust. So I'm thinking like buy bonds and go to the beach for a little bit, wait for the stock market to pull back significantly. I mean, I just can't get behind some stuff. I did alert in our community today a new trade, which is a idiosyncratic or uncorrelated trade. And so these are the types of things that I'm still hunting for, a special situation with a liquidation that I think a company is essentially winding down. And I think the proceeds that they'll return to stockholders will be like 50% higher than where the stock price trades. So something like that is kind of interesting still, but everything else, it's really tough to make a case for right now.
Yeah. Let's talk about housing. I've got some pretty interesting things to pull up here. We just had 30-year mortgage rates come out, another higher high from last month. And if we zoom out, you can see, you know, from the beginning of the year where rates really started to pick up from 3%, they topped out a little over 7%, and now they're climbing back up to that 7% zone. if we get a breakout above that, I think there's just going to be a mass implosion in real estate. And Macro Alf on Twitter was posting some information about just how unaffordable the housing market has really become. And in this example, he shows how the average monthly mortgage payment in Atlanta went from $320 in 2012 to just under $2,000 now. And when you look at just how fast that rose, like that is just absolutely unsustainable for the average person, right? Like wages have not kept up with that. So how does this shake out if rates just stay high like this?
Actually just posted a clip on my social about this. We talked about it on a show recently, how if housing prices don't budge more as rates rise, we're going to be in big doo-doo, because it's already difficult enough as it is. And I know that housing prices have come down significantly in more so the hotter areas of the US, but I've seen certain hot areas that you would think housing prices would be coming down more, and they're just not budging because the demand is still there, right? So because of it, they're just hot areas. Like Florida, for example, is still surprisingly on fire in certain spots. So I think that we're going to be in big trouble if higher mortgage rates don't budge housing prices more. Yes, we've seen them come in, but they went so far starting, in 2020 specifically, that even coming in isn't enough yet for a lot of people in terms of affordability, especially with inflation biting into disposable income. So it's kind of like a dual thing going on right now. We've got housing prices coming down in certain areas, but maybe not enough in other areas, right? With rates going high. And then we also have the consumer dealing with high inflation. If maybe the high inflation wasn't there to eat into the disposable income, they'd have a little more breathing room to be able to work with buying a home. So I think it's an extraordinarily challenging environment for anybody who wants to buy a home. Maybe there are certain pockets that are the exception to the rule, but generally, places that people want to live, it's still a challenge, I would say. And even more so, the fact that I can't remember the stat, but a extraordinarily high amount of mortgages are 30-year fixes that are locked under, it's either 3% or lower. They're like locked in at really low rates. Those people aren't moving. They're not going anywhere. And so the housing market is going to stay stagnant if prices don't come down more, I think.
Yeah, it's a weird thing, right? Because the supply's not there because nobody wants to sell and go from a 2 or 3% rate to a 7% rate, and nobody really wants to buy. So it's like, yeah, you have, buyers that are disappearing. So prices should come down, but the supply isn't there either. So it's just kind of like a stagnant market. But here's one more tweet from Alf that I wanted to post. He goes, portfolio manager at one of the largest hedge funds in the world, and he specializes in real estate. This is it looks like a private message with this guy. I'm at the biggest real estate conference of the year. Just wanted to give you the takeaway. The plane engines are off. Recession is already here for the real estate industry, which is the biggest asset class and a significant driver of labor and materials demand. It's an absolute disaster.
And we knew that, right? Like we knew that real estate was in a recession already. Jobs, furniture stores, housing, all of it, right? But yeah, it's ugly.
This tweet, by the way, kind of became a mini meme on FinTwit. There were a lot of people actually throwing shade at Macro Alf, saying that he basically created that screenshot because no one in the industry would actually talk about it that way.
You think it's fake?
I don't know, but it definitely became a mini meme where other people started posting fake screenshots of themselves texting themselves.
I don't know what to believe anymore, man.
We can't. The internet's the worst.
Yeah, I think like someone was also saying like the biggest real estate conference isn't until next month or something. So I don't know. I don't know what the truth is. I like a lot of Alf's content, but I think sometimes he maybe gets roasted for some of the things he posts. I don't know what's true and what's not with this one, but I do think the real estate market, yeah, I think especially on the commercial real estate side, we see a lot of commercial REITs, for instance, that are trading in public markets are near their multi-year lows. We've seen some defaults on commercial real estate portfolios already starting. I think PIMCO had one of their real estate portfolios default on some properties, and so that wave has already started, and it seems to be getting worse, especially if rates continue to rise.
What they need to do is take commercial real estate and convert it into multifamily, apartments, condos, which takes a lot of money.
Yeah, I saw some people talking about that and what it takes to do that conversion. It's a lot harder than most people think, because you got to get the permitting, but then you also have to, there's a lot of building structure changes you have to make, which apparently are not as easy as it seems. But
just throw up some cubicles, a little cot, $2,000 a month in downtown Austin. That's a good deal.
Honestly, they could make budget housing out of smaller spaces.
Yeah, those little pods that they have in Japan.
I think a big constraint is plumbing. You got to make a bunch of toilets instead of a couple on each floor.
That's true. All great points. I have no idea how that would work, but
I don't either.
Here's something weird. I follow this guy on Twitter @Guy Dealership. I guess it's a guy that owns a car dealership, and he's just always posting really cool stuff about the industry. He goes, 2006 Honda Civic, 166,000 miles as is. 3 years ago, it'd be $1,800. 24 hours ago, 4,500. Makes sense, right?
This is true.
I guess there have been 7 or 8 million less car sales since COVID. So there's still a massive backlog of undersupply that's still trying to get burned through. And like Toyota and a lot of more popular brands have basically no supply still, where Jeep, I guess they have the most supply. So I guess it's kind of barbell. You got some brands that just have no sales and a ton of inventory. You've got other brands that have low sales because they have no inventory, but everybody wants those cars. Still just a really weird market there as well.
So everyone's going to be driving Jeeps.
Yeah, there we go. Or Teslas apparently, because they're dropping prices.
True.
There you go.
I did see a graph of used car prices from, I think it was Manheim the other day. And there was that slight dip that we had, I think in December and January. And it seemed like maybe used car prices were rolling over, and then it ticked back up in the last month, apparently. So
yep.
It's going to be interesting to see. You would expect if we do go into some weak economic environment that prices will roll over there. But yeah, there's been this big supply constraint, and auto manufacturers are apparently ramping back up for production this year. But what happens if demand's weakening? Are they going to shut production off again? Is this just going to be like back and forth with used cars? I know, especially with rates being up too, like affordability is crazy. And I talked to somebody the other day that was like, yeah, I went in to get off my car lease. And he was like, there's no good options. He's like, you can buy the car lease out at a ridiculous rate. You can, give them the car back and then go buy something at a ridiculous rate that's super expensive. You can buy a crappy old used car for a way overinflated price. He's like, what do you do here? There are not very many good options here.
Quick financial planning tip, because I literally was having not an argument, but in sense with somebody about this. They have a older car that they thought was only worth a couple $1,000s. So they didn't have any collision coverage on it because they're like, well, if I wreck it, I'll just, it's a couple grand, worth a couple grand, and I'll just deal with it and buy a new one. So we looked online, and the car is actually worth like $9,000. So the Kelley Blue Book is like a couple grand, but like if you look at the actual listings, $8,000, $9,000, up to $12,000. And I told her, I was like, girl, you need to get collision coverage on your car because your car is worth way more than you think. So just a little tip, if anybody's rolling around, thinking that their car's a beater, not worth a lot, and they're not covered well, you may actually have a car that's worth a lot more than you think in this environment. So just a little thought.
A little tidbit there.
But it's true. These used cars that people think aren't worth a lot are actually worth something.
And you know who makes a ton of money off of used cars? That brings us to our next segment called Money Wisdom, where every week going forward, we're going to drop a little bit of like non-market related stuff. But I did this tweet thread, whatever, talking about there's an entire industry that thrives off of keeping people poor. And I started doing some research on this over the weekend. I was just like, what are the things outside of like casinos and lottery tickets that just keep people in this cycle of poverty? And the first thing was buy here, pay here car lots, right? I have a couple of people that I've known in my life that have owned car lots like this, and they actually have something that they call like sell, repo, and sell again, where a lot of times they're able to sell the same car like 2, 3, 4 times because they're selling these cars for stupid prices with sky high interest rates, and they know the repo rate is going to be through the roof. And so they get a down payment, they collect a couple payments, and then they go repo. They pay like $400 or $500 to have it repossessed, and then they sell the car over and over again. So I think right now, I don't know how they're doing, but I would assume that they're just cleaning up and really keeping people in really bad situations.
Yes.
The other thing, I'll just run through this list real quick, and you guys tell me if you have anything to add to this. But things like overdraft fees, right? Like what a shitty thing. Like what a
so bad
for being poor.
Mm-hmm.
It's so bad. They need a better system for that.
Yep. Payday loans. Over 12 million Americans use payday loans. And the stats basically say this: once you get into the circle of hell of payday loans, you're done. Like it's almost impossible to get out of that. Hence my little devil AI generated image. Rent to own stores. The FTC found that consumers paid an average of $1,500 for products that the retail value is $500. And they usually have like confusing terms, and you don't really know how bad you're getting screwed. So if you have to rent, furniture or appliances from, I won't name any of the companies, but from some of these big box stores that do the rent to own, you're probably getting screwed. The next thing, obviously, high interest credit cards. The average interest rate today is over 20%. And if you make minimum payments, you're just going to be in debt forever. Also, pawn shops. I think some of us might know some friends and family that have fallen into this trap. Instead of pawning, why don't you just try to sell either online or at a yard sale or something like that? Also, debt collectors, they use just really terrible high pressure sales tactics. And a lot of debt collecting agencies have been sued to high hell because of just impersonating law enforcement officers, threatening fake legal action, things like that. Also, tax refund loans, subprime lenders, money transfer services like Western Union. Thankfully, we got Bitcoin now. And I think, to kind of recap this is just the reason why it's so vital that you invest early and often, do whatever you can to increase your cash flow, minimize taxes, and build wealth now so you don't fall into this cycle of poverty.
Well, it really comes down to education, right? I think that's above all. I think a lot of, as you were going through that list, Chris, it hits hard in the chest because I have somebody close to me that has fallen into all of those traps. And so I think that's like why I am the way I am about money and finance, and why I'm here today is because I've seen and lived through all of that. And as a child, right? And so I know how straining it is, but I also learned that the core issue has a lot to do with education, financial literacy, understanding the consequences of the actions. A lot of people get put in situations where they have to turn to those things. But if they learn to change behaviors and, like you said, learn to increase income and really focus on the wealth building, they need the mental shift. So it hits close to home, and it just stinks that people aren't given the foundation that they need to manage their money better. And they have to go this route because they don't know. They don't know any better. So, yeah, that hits close to home.
Yeah, I'm sure everybody knows someone that has fallen into one of those traps. And yeah, it's just sad. Like once you're in it, it's really hard to break out of it.
Impossible. Almost impossible. Unless you run into some big sum of money. But
or
yeah,
bankruptcy. And
I think that's why we do what we do here, is because we want to teach people. We want to educate people on the right ways to do things. If you've got the knowledge, then you've got the power to change your situation. Basically.
Absolutely. Yep. All right. Let's get into some Q&A. What do you guys think?
Let's do it.
All righty. Let me, oh, I guess I got to change the screen here. So we've got questions both from our community and on the Twizzler. Let's pull up the Twitter questions first. First question. Somebody was quoting, the U.S. has defaulted on its debt twice, once in 1933, once in 1971. And the question is, what are your thoughts on the possibility of a U.S. default? What do you think that looks like? Trav, kick that one to you, man. Do you think the U.S. is going to default on its debt? And if so, what does that look like?
Whew, man, that is a loaded question.
Let's unpack that.
You know, I've always been of the mind that the U.S. will try to slowly inflate away the debt rather than outright defaulting. But we're in such a nasty political environment that I think there is a higher than normal probability that the U.S. could have a technical default, a very, very short-term technical default if we don't deal with this debt ceiling issue. If the fighting between both sides of the political spectrum gets so bad around this debt ceiling issue, we could actually have a technical default. It's not out of the realm of possibility. And in fact, if you look at the credit default swap market, where sophisticated investors actually pay to get protection against defaults on bonds, the CDS rates for where that have gone up on U.S. government debt. Now, they're not at like alarming levels that suggest the probability that they expect is high, but you know, it's up from, I think, like, you know, something like a 0.25% to pay for that protection. And now it's up to like, I think 0.75% to pay for that protection against a default. So the market is saying that there is potentially an elevated probability of U.S. defaulting. This would be the U.S.'s own doing. This would not be because of any issue around being able to pay for it. We print our own currency, right? We have the ability to pay off all our debt at once if we wanted to as a country. The problem, again, is the debt ceiling issue. And if we decide not to pay our bills, and that, when I say we, I mean, really it is up to Congress at this point. And so Congress has this ability to create these budgets and then decide that they're not going to pay for the budgets that they themselves already passed with this debt ceiling stuff. So it's really stupid. I hope it doesn't come to that. If we did get a default, even if it happened for 12 hours or 24 hours, it would cause significant stress in the financial system globally. And it could lead to significant recession or depression potentially if it, you know, created enough long-term ramifications. But again, I'm hoping that it doesn't happen. In past experiences of the last decade or two where we've had this debt ceiling fight, we've avoided the worst of that. But there is a non-zero probability it could happen.
Jay Powell even told in the testimony, he was like, yeah, you need to raise the debt ceiling.
Yeah.
Just said
like,
it point blank to them.
Yeah, well, like, why are we playing Russian roulette with ourselves? It's
what
insane.
A silly thing. Just a silly thing. Colin Roach has tweeted about this too, how just ridiculous the whole debt ceiling thing is.
And look, I get the arguments about, hey, we need to rein in spending, we need to fix the gap in Medicare funding, all of that. I agree with all that. But the time to do that is not over the debt ceiling fight, which is this arbitrary self-imposed limit. The time to do that is when you're setting the annual budgets for the government and passing those through Congress. So yeah.
All right.
Well said. Next
question. How possible is it for the bad real estate data to be a strong recession indicator or a strong outlier? So yeah, basically, you know, does a recession in real estate bring on a recession to everything else?
Well, as Macro Alf tweeted to himself, real estate is one of the largest industries. And it certainly has knock-on effects to many different areas, whether that's construction, real estate services, you know, the wealth that people feel from their real estate holdings, et cetera. And we obviously saw during the global financial crisis, the real estate industry was a big catalyst for the recession that happened afterward. And so now people are very focused on the effects that real estate can have on the overall economy. In this cycle, I think it's going to be a little bit different than the GFC, of course. I don't think people are quite as over leveraged in housing as they were. But nonetheless, like, yes, I think a slowdown in real estate is going to have knock-on effects, and those effects are just starting to be felt. And if we see rates continue to rise, it's going to get worse. So I think that's without a doubt, there is an effect, and we haven't seen the full brunt of it yet.
Awesome.
But one other thing I'll say on that, though, by the way, is Nikki mentioned this earlier. We do have a significant amount of people in the US on fixed mortgages, on 30-year fixed mortgages that are at low rates. And so they're not resetting to these high rates. And so that does help to at least keep some of that knock-on effect at bay. It's really the new real estate development weakening that is going to create that subsequent effects in the overall economy, and not so much that homeowners that have low rates today are going to be defaulting in mass.
Was it on the Home Depot earnings call where the CEO said that they're just seeing a ton of people, instead of moving and buying new homes, they're just renovating where they are now?
That's right. Exactly right.
Cool. See, I pay attention to stocks.
You're getting your macro game on too, I can tell.
No, I'm just whatever, fake tweets Alf puts out, I'm going to take.
One thing I want to add to what Travis said was also, I heard a stat, I can't find the actual data chart to show it, but the home equity to debt ratio is apparently looking very favorable for consumers. So it's giving them a little more breathing room. And it's, that's another dynamic that's quite different from 2008 and even prior recessions. So something to consider.
Makes sense. All right. Next question. Curious your thoughts on using like Galaxy as an altcoin proxy. I'm looking for a more hands-off, higher beta way to get exposure to alts. So yeah, there are different types of publicly tradable, either funds or assets or, derivatives like futures and stuff that you can use to get exposure to crypto and alts. This is just my approach. I know everybody has like a different opinion on the best way to trade crypto. I think by doing something like this, or any kind of way where you're either indexing alts or trying to get exposure to everything, I think that shotgun approach is going to be a very low performing way going forward. I think that there are still a ton of cryptos that just need to die a terrible death. There's so many out there that have hundreds of millions of dollars of market cap that are effectively dead projects, and they're just trading on exchanges, like basically degenerate gamblers are running the price around. So for me, going forward, I'm using more of a sniper approach than a shotgun approach. Hey, maybe that's
Freudian slip. Do you need to blow your nose?
Not a shotgun approach in the shitcoin space. No, like I'm going to be very, very selective on any kind of alt that I hold for any significant period of time. I don't really invest, quote unquote, in alts. I'm a trader, right? The main goal is to trade alts so I can accumulate more fiat and more Bitcoin that I can recycle into other investments and other asset classes, right? So do I want to just buy anything like that and hold it for a while? I just don't see the alpha there. I don't know. What do you guys think of that?
Yeah, I think you'd need a really strong bull cycle to have a high correlation between some of the alts that are outperforming and something like a Bitcoin exchange, or I'm sorry, a crypto exchange like a Galaxy. So yeah, I think obviously they will move up in tandem in a very strong bull market. But if you're not in a very strong bull market, I think the correlation is going to be quite loose, or be much looser. So I'm not sure that would be the best way to play it. But if it's the only way to play it, maybe that would make some sense.
Yeah, I think if we were in full on alt season, which I don't think we're close to, but yeah, I mean, maybe that's a way to ride the trend. I feel like maybe being a little more of a sniper is probably the smarter play there. But again, that's just my opinion.
Yeah.
Okay, next question. Have you seen anybody successful use astrology in their trading? Personally, I use tarot cards. That's how I make all of my decisions. I don't know. Every now and then this pops up, and I see people talking about it on social media, and some people swear by it.
I've never tried it. I don't know.
Personally, I've never seen it work in any meaningful capacity, but it doesn't mean that it can't work, I guess. I'm not going to rule it out. I don't have the data.
Yeah, I don't either. I don't know.
Travis, what are your thoughts on uranium?
Oh, uranium. Uranium's a very
We were
interesting
talking
market.
about that one quite a while ago. What was the latest?
Yeah. Small exposure to it. Still bullish on it longer term, but it's a very slow moving market. And thankfully, we've had a movement towards the world being more pro-nuclear again after last year's energy crisis, and particularly areas in Europe and countries like France and even Japan reopening some of the reactors. They've started to realize, hey, nuclear power is great baseload power. It makes a great complement to some of the alternatives like wind and solar, and it produces power for a very, very long time. And as long as you can contain like the side effects and the waste and avoid any accidents, aka Fukushima, then nuclear is an amazing power source. But uranium obviously is one of the components of nuclear power. It's the fuel used for it, and it's a relatively low cost for generating nuclear power. Uranium has been in a bear market for the better part of last decade or so, but it finally started turning up last year. And there's some structural reasons why we think it could continue to run higher. There's a buyer of uranium now, a financial buyer of uranium called the Sprott Uranium Trust, which is out there buying thousands of pounds of uranium every day. And then we also have some structural undersupply given issues around the Russia conflict and some other things in the uranium market as well that we think help the supply demand imbalance. But, it really is a longer term play because a lot of the nuclear utilities, they contract for their uranium that they need like 5-6 years in advance. And so if there is a big supply demand gap, we might not see it for years at a time. So that's kind of the whole big picture around uranium. Again, I kind of like something like the Sprott Uranium Trust. I don't know what the exact timing or catalyst looks like for it to say go to $100 a pound, but I think it maybe gets there over a few years, and I kind of just hold a small position personally.
Nice. Huge fan. How and is the U.S. housing market affecting other countries? Yeah. So basically, like, can the U.S. housing market affect other countries' housing markets? I haven't thought too much about that, like inter-country dynamics. I don't know. I know like the Aussie market doesn't exactly track our boom and bust cycles, but I don't know.
Well, I would guess if the U.S. housing market's not doing well and the consumer feels less wealthy, they may not travel to other places. They may not buy second homes in other places. But yeah, I don't know if there's like a strong correlation. I've never really thought about it that way.
I could imagine there's some secondary effects, like wealth effects for U.S. investors who might be investing abroad, banks who lend abroad. If the banks are seeing losses on their real estate portfolio, they might pull back elsewhere. Certainly Canada probably has closer ties to the U.S. market, even though they have more floating rates. Vancouver's not that far from Seattle, things like that. Toronto's not that far from New York, right? So
true.
Yeah, I would imagine there's some linkage, and we could probably go back to the GFC timeframe and look at some data around that. I just don't have that offhand, but I bet there are some linkages, loose linkages.
Yep. China is publicly stating that they are preparing for war with the U.S. How will this affect traditional markets and crypto? And
badly, very badly.
My question I want to tack onto this is if the U.S. bans TikTok, will that be the thing to spark World War III? Would the fall of TikTok be the cause?
I think it would cause a war between Gen Z and Congress.
There you go.
Yeah. Hey, one way or the other, isn't TikTok going to be the downfall of humanity?
Either way, yeah. Except China, because they don't let their kids watch all the bullshit that we have here in the U.S. Don't they promote like science and learning and limit the time that you can be on the app?
I think it is starting to be more believed that we could ban TikTok. Like before, it was like, they'll never ban TikTok, man. But now it's a more serious conversation.
Yeah, you're starting to see states ban it, at least for their government employees and things like that. But it seems like it'd be a really unpopular decision to do it at a fully national level.
Wildly unpopular.
Right? So maybe after an election, maybe you've got some time to do it. But otherwise, it just seems like, I don't know, you're going to lose a lot of voters. Now, they're young voters who don't turn out as much as the older boomer voters. So
I bet you the boomers would love it.
Yeah.
Like they'd be like all for it.
They
I
want
know, I'm
everybody
all
back
for
on
it.
Facebook Blue so that they can.
I just don't want to deal with another platform, another social platform to keep up with it. That's my thing.
Yeah.
I'm like, enough's enough.
Yeah, but I mean, I guess back to that question, like if we go to war with China, yeah, that's bad.
That's
I think
bad.
markets would definitely dump in the short term.
Not
Yeah.
good.
I don't know that I fully buy the premise of the tweet that China is openly preparing for war with the US. I think that isn't, I think there are a lot of people who speculate about that, but I don't think that's actually true. And in fact, even if you look at some of the comments that Xi makes and things like that, like he'll pull back from the rhetoric at times. And I think the US, the reality is US and China can't go to war. It would be a nuclear war. It would wipe out half or more of the planet. Like it's very binary, right? You either assume apocalypse or we avoid it, and hopefully cooler heads prevail.
Well, you would also think that China saw how the world kind of banded together for Russia or for Ukraine against Russia. You would think they would say, oh, well, we may want to step carefully because they'll probably do that to us too. I would think, but I don't know.
I'm not prepared. I don't have any plans for World War III, right? If it happens, it's like, okay, well, I'm all my effort is planned around we're not having World War III. And if we do, oh, well.
Well, that's all you can do, right? Because if that does happen and we have some absolutely catastrophic thing happen like that, at that point, what does your portfolio matter? It's like, if nuclear war is happening. But
I guess you could make the case that like being prepared in the prepper sense, like having a bunker, things like that might help somewhat. But I don't know. I don't know. I think cooler heads hopefully prevail and we avoid the worst case scenario. I think maybe you could see some skirmishes around some small islands or things like that. But I would be very shocked to see China and the U.S. go to outright full scale war. I just don't think. I don't see the upside for anybody in that scenario. And I get the tensions and I get the different interests at play, resources, etc. But I also think that there's really no winner from a war in that scenario. So I don't know why any leaders would actually authorize it. But I don't know. Maybe I'm being too logical. I don't know. Crazy things have happened in the world.
You probably are.
Yeah. All right. We're running over an hour, so we'll wrap this up with a few more questions. This one is a little more introspective, a little more thinking long term. But basically, whenever you get old, what are you going to do with your money? You want to die with zero, pass it as an inheritance, donate it? What do you guys think about that? I think that's a good question that I really haven't put that much thought into because I'm going to be dead.
I'm a financial planner, so I've put a lot of thought into it. But
yeah. I'm half joking, but yeah, I mean, I think inheritance, but yeah, I mean, look, like
it's very personal too.
Yeah. I kind of like Alex Hormozy's approach to this, where he's like, look, it's a bad idea to pass a lot of money to heirs, and it's probably better spent in philanthropic things. I don't know. What do you guys think?
It's like, there's almost no good answer because like there's the idea, like a lot of wealthier people now are starting to say, well, we want to give it away to charity. But I've also seen a lot of philanthropies and charities just blow money and pay their executives too much, and they don't actually get anything meaningful done in terms of philanthropy. And so I question some of these bigger philanthropic organizations and their effectiveness. On the other hand, you don't necessarily want to leave your bratty children and their children and their children's children billions of dollars because, what have they really done to earn it? Again, this all assumes that you're super wealthy. Most people are not going to get to that level and have that problem. So you're just trying to like get to your end of your life with enough assets to like get through at a comfortable level. That's goal number one. I'm sure, Nikki, that's what you're thinking most about. But for me personally, I guess like it would be great to have some assets to leave to the next generation, but not to like impart so much on them that they become assholes. I don't know.
Well said.
And you can also do a nice mix of all of it, right? Like you can make sure that you enjoy your money while you have it in life and use it. The one thing that I really like is the idea of being able to do cool things with the people that I love, do for them, take them on these amazing once in a lifetime trips that they would have never experienced. Like do that kind of stuff and spend it while I can see the joy on my loved ones' faces. So a mix of that, a mix of inheritance if you have children or whoever you want to leave some money to, and then just to make sure they're okay when you're gone. And then charity, if you're philanthropic, you can choose certain charities that you want to put some money to. A lot of people, what they do is their required minimum distributions, which this is something that, I may do when I'm older, is because you have to take money out of your IRA when you're a certain age. A lot of people take those required distributions, instead of paying taxes on it, they donate it to a charity. So it's a nice way to do that while not having to take a huge tax hit on your traditional IRA or traditional 401k. So I think that there could also be a nice mix of all three of those things that you could do in your lifetime. Yeah.
I like that.
I like the idea of just having like epic adventures as a really old person.
I like that too. Or like taking our niece and nephew on cool trips and stuff like that. Like,
or hopefully by then they have like bionic robots that'll hold us up, and like I can still like go walk up a mountain, and I don't know.
We're going to be skiing till we die. That's my plan.
That's right. All right. 2 more questions and we'll wrap it up. These are from our Discord community. If you're not in there, go to wetalkmoney.com/community. Jump in there with us. Zero is asking, he was listening to a podcast where the guy who created the yield curve inversion model said he thinks that this time is probably a false signal. What do you guys think of that? Do you agree, disagree? What's the point behind why it could be a false signal?
I actually listened to the podcast, and the major points that were made were that there's the housing situation where a lot of people have a lot of home equity, right? Also, the nature of the jobs the nature of the layoffs and the nature of the workforce is very different today than it was back in the day in like the 60s when we kind of had this situation happen. So think about back then, it was a lot of, manufacturing workers, whatever. Today, it's a lot of tech workers, and it's very easy for tech workers to get, if Google and Facebook and all them are laying off, those are very high demand workers. So it kind of gives us a different labor market environment that could kind of keep people afloat and employed. And he also mentioned that the job openings, which again, this was talked about in the testimony with the Fed or Jay Powell yesterday, basically there are 1.9 job openings to the unemployed person. So that is different. That is very different from prior recessions, before we went into the recessions. So those are kind of like the main points that he made. And he also said that he thinks that the layoffs that are happening are really smart and risk management, so to speak, because there was all this demand from all the stimulus that went out. Companies had to hire to meet the demand. And now, because of all of that, they're having to let go. And so it was a very different dynamic from anything we've really seen. So that's kind of, he sees a lot of, and when I say he, I guess the founder of the model that reflects the negative yield curve that tells us if we're in a recession or going into a recession, it was that gentleman who was speaking. And he was basically saying that a lot of things are kind of different. So he thinks that this could be a false signal. And I kind of agree with a lot of his points, to be honest. I feel like before I even listened to the podcast, a lot of the things he was saying, I've been saying on like my YouTube macro videos and stuff. So I personally agree that this time could be different. And just go in a way that people just aren't expecting.
Something that I recently was learning about was, you guys know Micro, the guy that does the Dirty Jobs show? I love that guy. He's got the most beautiful voice ever. And he's just like a man's man, like just a cool guy, right? Anyway, he was talking about how there's like 7 million working age men in the US that don't want to get off their ass and work. Like the labor participation rate, I guess, is low. I don't know if you guys know what
it's lower. Yeah. It's declined since the pandemic. Yeah.
But there's a whole generation of guys like our age that were sold this idea of like white collar is the way to go. You go to college, get a nice cushy tech job. But the reality is like in the quote unquote blue collar space, you can become a multimillionaire being a plumber or an electrician or like being a trade, or as our Aussie friends say, being a tradie, right?
Yeah.
Driving a ute and being a tradie. It's like there's more ways to build wealth and to create really good income for yourself than just being in tech. And I feel like our generation has missed that. And I don't know, there's just a lot of people that don't want to participate in that part of the economy. But I don't know, maybe with all these like AI inventions, like people will be pushed back into the blue collar sector.
That's a prediction I have. I actually think that, trade is going to become big. I think that people are going to be coming out of trade schools making 6 figures a year, just like they came out of coding school doing it, with coding. I think that's going to be the new thing because people really aren't gravitating towards that at all. And I know people that run, businesses that need trade workers that can't find them.
Mm-hmm.
They're having to pay $120,000 a year for somebody to install cabinets, right? Like, what? that's a lot of money. So
I agree. I think the free market takes care of that over time. It just takes a little while to shift all the perceptions and the pathways and things like that. I think that will happen for sure. Yeah. Maybe a decade that it takes, but
yeah, I mean, I don't know if I was like a 18, 19-year-old guy and like my prospects were go to, pay 20, 30K a year for college or like go to a trade school real quick and start making 6 figures like that 6 figures sounds a lot more appealing than going and getting drunk. I mean, I don't know, partying in college sounds fun, but not the debt.
Not worth it.
Not the job prospects.
Worth it.
You can still party without the debt,
Yeah. That's what I did. I kind of skipped out on school, but a lot of my buddies were in frats and I would just go hang out with them and party with them and let them pay for everything.
Yep. Let them pay the fee. Yeah, let them pay the fee. And we just kind of chugged along, like snuck in.
Yeah. All right. Last question from Ian in the community. How does a retail investor in the UK buy GBTC? I guess he's just having a hard time finding a place to buy it because it's considered OTC. Basically, what kind of stockbroker could he get in the UK?
Yeah, I mean, basically, he would need a stockbroker that would allow him to get access to OTC data and allow him to buy and sell OTC stocks. And you typically that's going to be like a US, someone that's going to work with US stocks. So Interactive Brokers is a really good broker that works with a lot of international individuals, and they're all over the world, actually. So that might be a good place to go to see if you can open an account there. I know there's a lot of rules depending on which country you're at, which broker you need. So you'd have to really dig into that. But basically, you need access to US data and OTC data specifically to be able to purchase the OTC stock. It's the same in the US. GBTC is OTC, over the counter, for us too. So we have to have, an account that's set up to be able to buy and sell OTC stocks to be able to do it.
Cool. All right. Well, guys, we've gone almost an hour and 15, so we'll go ahead and wrap it up there. Any final thoughts or words of wisdom before we get off of here today?
Watch the Trendline of Doom. It'll be speaking volumes over the next few days.
Yes. Stay dialed into what's happening with the SEC and crypto too, and just all the hearings that are happening. Like it's a really interesting time, even if you're not a crypto fiend like we are, or I am. We're living through an interesting time in the redefinition of money, and the battle is heating up. That's what I'll say. Trav, what are your final thoughts, buddy?
Let's avoid war. Let's avoid any defaults on debt, and let's go out there and have some fun.
Just some peace and pickleball, man.
Yeah, peace and pickleball. I bet you if Congress people played more pickleball, they'd be happier and get stuff done.
Have you ever seen a sad person playing pickleball?
Never.
No, not once.
Never. Impossible.
All right, guys. Well, thanks for joining us. Make sure to subscribe to the new YouTube channel. Leave us a review, would you? On podcast stuff. We don't really ask for reviews, but I think we should start doing that. Yeah. If you like the show, go review it. Tell somebody about it. Like it up. Come join our community. WeTalkMoney.com/community. Build Wealth is the promo code. One word. And with that, I'm out of here.
Ciao.
See ya.
See you guys next week. Take care.